Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 22nd, 2026, and we're diving into the latest earnings report from Procter Gamble, a global leader in consumer goods. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Procter & Gamble has just released their fiscal year 2026 second quarter results, and there's a lot to unpack, from sales performance to strategic outlooks.
Revenue and profitability overview. Let's start with the top line. Procter & Gamble reported net sales of $22.2 billion for the second quarter, which is a 1% increase compared to last year. However, organic sales remained flat. John, can you elaborate on this?
Absolutely. The slight increase in net sales was primarily driven by higher pricing, which was offset by a decline in unit volume. Organic sales, which exclude the impacts of foreign exchange and acquisitions, were unchanged. This indicates that while P&G managed to maintain its sales levels, the growth was not as robust as one might hope.
And what about profitability?
Procter & Gamble's core earnings per share were $1.88, in line with the previous year. Net earnings for the quarter were $4.3 billion. The company faced higher restructuring charges, which impacted their diluted EPS, bringing it down to $1.78, a 5% decrease from last year.
Segment performance. Let's delve into the performance of P&G's various segments. How did they fare this quarter?
The beauty segment saw a 4% increase in organic sales, driven by innovation and pricing strategies, particularly in Latin America and Europe. The healthcare segment also performed well, with a 3% increase in organic sales, thanks to favorable product mix and pricing.
And what about the other segments?
The grooming segment remained flat, with pricing gains offset by volume declines. The baby, feminine, and family care segment faced challenges, with a 4% decrease in organic sales, primarily due to volume declines and unfavorable geographic mix.
Operational efficiencies and future outlook. John, let's talk about P&G's operational efficiencies and their outlook for the rest of the fiscal year.
P&G generated an operating cash flow of $5 billion, with an impressive free cash flow productivity of 88%. They returned $4.8 billion to shareholders through dividends and share repurchases. Despite the challenging environment, P&G has maintained its guidance for fiscal 2026, expecting core EPS growth and adjusted free cash flow productivity to remain strong.
That's reassuring for investors. What are the key factors driving this confidence?
The company is focusing on its integrated growth strategy, aiming for balanced top and bottom line growth. They are also expecting commodity costs to be neutral and foreign exchange to be a tailwind, which should support their financial performance in the coming quarters.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.87 for this quarter. How did P&G's actual performance compare?
P&G reported a core EPS of $1.88, slightly beating the analyst forecast of $1.87. This is a positive sign, indicating that the company is managing its costs effectively and delivering on its strategic initiatives, despite the restructuring charges impacting their GAAP EPS.
How are analysts reacting to this performance?
The sentiment is generally positive. Beating the EPS forecast, even by a small margin, is a testament to P&G's operational resilience and strategic execution. Analysts are likely to view this as a sign of stability in a volatile market.